Thank you, and welcome all, and thank you for joining me today, providing an update on Podium Minerals, our Parkes Reef Platinum Group metal project, and our recent metallurgy results. If you can please take the time to read the information slide, which is on the screen now at your leisure. Our presentation is posted onto the ASX and will be uploaded onto our website. I believe there are three key reasons on why Podium Minerals is still a compelling investment opportunity. Platinum group metals are rare precious metals considered globally as critical minerals, with many forecasting increasing demand in these metals to support growth in the vehicle sector and the rapidly growing green hydrogen and fuel cell space. We are in the right suite of metals moving forward. Our Parkes Reef PGM ore body is a resource of global significance. The size, growth prospects, grade and mineability are significant strengths in our resource globally as we drive towards a new Australian PGM commodity. Podium has assembled an experienced project and operation skilled team who have successfully built, optimised and run mining operations in Australia. We have an experienced board, which also has project operational and strategic skill sets. And as we'll see in this pack later on, we've recently added 100+ years of PGM experience accessible to our company through the introduction of a technical advisory panel. I'll give a brief update on the PGMs. I consider PGMs are to hydrogen as what we know lithium is to battery. Platinum group metals are a group of rare metals with strong conductive properties and high melting points, and they are listed globally as critical minerals globally. Platinum global supply is around 7 million ounces, including the recycling, and palladium is approximately 10 million ounces. And pleasingly, both of these metals do have high recycle potential for reuse and for a better carbon footprint. Both of these metals, platinum and palladium, are used heavily in auto catalysts, where they already play a significant decarbonisation role in removing exhaust gases from vehicles. And we've seen emission changes globally over the last 20 years. And with that, we've seen increased PGM loading associated with those vehicle auto catalysts. Speaking recently to industry operators and PGM refiners, we're expecting demand for these PGMs increasing in the combustion vehicle market towards the end of this decade, before we start to see combustion engine vehicles start to flatten off from 2030 onwards, as they are replaced by both electric vehicles and fuel cell vehicles. Platinum also has a wide range of uses. It's not just in autocats. Platinum has high use in industry applications, including chemical processes and glass manufacturing. It's heavily used in jewellery and investments. And as we'll see on the next slide, it's also a critical ingredient into the hydrogen economy. We are seeing significant global investment in the production of green hydrogen and application of hydrogen as an energy source and driving fuel cell vehicles. Platinum and iridium are the major ingredients in PEM electrolyzers, which are used as the catalyst in the conversion of water to hydrogen, and subsequently then converting hydrogen into electricity through the fuel cell process to drive vehicles or to power regional operations or uses. Global PGM supply is concentrated in two major regions. The platinum, rhodium, iridium is predominantly sourced from the bushveld regions of South Africa and into Zimbabwe, while palladium is sourced both from those same regions in South Africa, but also a huge amount in Russia, where it exists as a large byproduct of their substantial nickel mines. Having recently been to South Africa and particularly Rustenberg, which is at the heart of the PGM industry, I was able to witness firsthand the size, the scale of the PGM industry in South Africa, but also understanding the age of the infrastructure and plants in place. And it's unfortunate to actually be able to see and hear from the operators in South Africa around power disruptions, which are impacting not just the whole of country, but also these these PGM operations on a daily basis. Whilst these companies are highly resilient, we don't believe they will have the ability to significantly ramp up to meet the forecast shortfall of platinum and broader PGMs expected by the end of the decade. This leaves the opportunity for the rest of the globe, Australia, and in particular Podium, as great investment options and development and producing options to meet the rising need of PGMs. I'll provide a bit of an update around where we are from Parkes Reef as we continue to make significant progress on our project. As a reminder, where we are now after strong progress in 2022, we now have a 6 million ounces of combined PGE resource, plus significant copper, nickel and cobalt in the resources byproducts. We are Australia's largest platinum resource, and we have a combined weighted basket price at the time of publishing of just under $4,000 per ounce. So just to reflect on that, 6 million ounces of PGE in resource and a basket price of just under 4,000 Australian per ounce. And to put that in perspective, today's Australian gold ounce is trading around about $2,900. So it is absolutely a suite of precious metals, but precious metals with industrial uses. We have wholly owned PGM resource with existing mining lease and native title in place, and this asset absolutely underpins our strategy to be a sustainable and secure Australian provider of critical PGMs for a clean energy future. Just a reminder of our PGM resource in a little bit of technical detail. Significant explored 15-kilometre strike length, so large, long, significantly long ore body. We've had continuous PGM intercepts over the last 4 years with 300 holes or greater than 93% of our drills intersecting the reef. So we've had high confidence in our PGM resource. It's because it's near surface, it's highly amenable to open cut mining, and because it's steeply dipping, so it's a vertical ore body, it's also highly amenable with its 15-metre wide ore body to bulk underground mechanical mining methods, similar to what we see in gold operations, in copper and nickel operations throughout Australia, using large bulk mining equipment. The 6 million ounces is currently only modelled to 250 metres below the surface, but as we've noted previously, we've had 3 holes drilled to 500 metres in depth, all intersecting the reef along the predicted dip. We believe the growth potential at depth continues to be significant, and work is planned for this year to really test that through seismic and magnetic surveys to help inform what the true size and scale of this project could be. Our high-grade zones allow us to consider different mining methods also as part of our work this year. The high-grade PGMs, which will come with lower volume, can feed into the process plant, and or we'll investigate the look and the opportunity to do the bulk mining methods across the full 15 metres, which is generally a cheaper mining option than the narrow high-grade option. So there's benefits in both, and there's the opportunity to scale and sequence the mine at the appropriate time for higher cash flow in the early years, and then transition to increased ounces in future years. So we've got high optionality around multiple mining methods associated with this resource. Our mining strategy has not changed. We are and have been doing conceptual mining work to understand these potential cost and production options we have for Parkes Reef. And we now have, and we also need to understand how many operations a 15-kilometre long ore body could host as well. So we have the potential to host a suite of operations, not unlike what exists in Rustenberg and the Bushveld complex in South Africa. Our processing pathway remains our number one priority. We are rapidly progressing our downstream processing route, focused on producing a high-grade, high-value suite of products suitable for a refinery feed. We expect, compared to our global peers, that this processing route will have a lower carbon footprint than the traditional smelter route. It'll have simplified logistics as opposed to trucking and shipping concentrate into global smelters. And we have the opportunity to be dealing with high-grade products managed in hundreds of kilos rather than thousands of tonnes, allowing for higher metal payabilities and commercialisation and ownership of our final metal products. Since November 28th release, where we first released our first set of atmospheric acid leach results, we've continued work on our downstream leaching process with great success. Our primary focus is to understand the options we have to maximise metal recoveries, and Tuesday's release this week shows the high potential our ore has to this processing method, and the results are truly world-class, and we've seen significant improvements under different operating or testing conditions in platinum, but also along the full suite of 8 metals. So we're absolutely excited by the opportunity that our ore body has towards an economic pathway. Following our trip in February to South Africa, I was able to witness the PGM industry in the flesh. Large PGM ore bodies in South Africa, not significantly unlike what we have at Parkes Reef, have the ability to host multiple operations. And they've been able to demonstrate that in Rustenberg, multiple operations working next door to each other, using toll treatment and refinery treatment, and they've operated over many decades. And whilst our grade is lower than South Africa, the 15-metre ore body width allows us to consider the bulk mechanical mining methods at a lower risk and cost of mining, as opposed to the example in the top right of the slide around very narrow high-grade reefs, somewhere in the range of 0.8 to 1.2 metres high. So same composite of PGM metals, but significantly different mining methods associated or expected with the two PGM reef packages between South Africa and what we have at Parkes Reef. So we're in the right products. We've got absolutely the right project. What we need to continue to work on and really reinforce is we've got the right team to continue this work as we head towards our preferred pathway to production. Our board and leadership team is experienced in all facets of the mining value chain and the project and operational requirements of mining in Australia, as well as connections into the PGM market from exploration all the way through to marketing and customer relations. So we've got the team which can run this from concept through to operations over the coming years. We are not blind to the fact that Australia has traditionally been short on PGM experience. So recently we've added world-class PGM operators, geologists and strategists to challenge us and optimise our project thinking, taking into account their 100 years of experience. And with DRA as our preferred study processing design partner, they have built the majority of all of the PGM operations globally, I think outside of Russia. So we've got the right partners and we've got the right PGM expertise supporting, challenging and optimising our project moving forward. At the end of December, we had 3.7 million in cash. And along with many others in the junior sector and PGM sector, we've seen our share price retreat and retreat heavily over the last 6 months. With support from our existing shareholders and the compelling investment opportunity, especially at today's price, we're looking to see significant growth in our share price underpinned by strong results. And when considering our peers, we do think we've got a strong value proposition around our high resource with high grade results and our development and operational experience. So quick recap to read through. We are Australia's largest platinum resource, Australia's largest rhodium resource, and Australia's only iridium resource at this stage. So as we see the PGM industry grow, we are well placed. We are well placed to take advantage of that as we head towards the back end of this decade. We're delivering on strong project outputs on our pathway to production and have delivered these with successful results over the last 12 months. Our pathway forward is really focused on 3 key areas. So this year's a busy year for us, but it's a busy year to really answer and anchor down what our project pathway is going to be, what our project could look like from a size and scale. This will be underpinned by geology work, which is work on illustrating the potential size and scale through geophysical testing, as well as geological modelling and close space drilling program to better inform the ore body and increase our resource confidence. This will inform how we best economically update our resource to indicated and or measured status throughout the year. From processing, it is still the core of our work. Optimising recoveries in the flotation stage of our PGM process is important, as well as in the leaching process. Continuing to challenge our testing around energy use and reuse, optimising our suite of reagents, all of these are important into driving our economic parameters and informing the size and scale of our processing design as part of our pathway moving forward. Mining, using the updated geology model we're working through, we'll continue to work on conceptual mine designs, which will best inform the cost, size, scale, and location of starter mines to be considered. And to wrap up, demand for PGMs are rising on the back of increased vehicle sales forecast in the next decade and the emerging hydrogen industry. Growth from existing PGM regions will be challenging. Parkes Reef is a globally significant resource with great growth potential. Our resource is highly amenable to mining methods and has shown great response to the acid leaching tests to date. Podium has the board, the leadership team, and the PGM experts to deliver this success. I'd like to thank everyone for listening to the update today, and as always, I'm available through our office and through phone and emails. But in the interim, I'd love to throw it open for any questions.
Thanks, Sam. We've had quite a few questions come in. Maybe we could start. You did mention your trip to South Africa recently. Perhaps we could start there. I think it would be perhaps useful for people to get a bit of a rundown of what you learnt over there. Obviously, you came back with a technical advisory board, which is impressive alone. But is there any colour you can give us in terms of conversations with other industry players that you had while you're over there?
Yeah, thanks, John. The South Africa trip was very important for us. I think trying to crack into the PGM industry without understanding where the industry has been, where it comes from, and what their growth potential has been important. I spent time with our chairman, Rod Baxter, over there. We attended the Indaba conference where we met a huge number of operators around the PGM scene, including some of the larger operators and the service providers to Anglo Platinum, to Sibanye-Stillwater, to Impala, to Northam. We got their views around where they see the PGM market, and they're buoyed by the driving increased demand through hydrogen production, which they are supportive of and can see it coming to fruition. They're challenged, and they openly told us they're challenged by power and infrastructure impacting their abilities to run the mine stably, and also the challenges around increasing production, particularly as the mines get deeper and the ore body and the infrastructure gets older. So that was a hugely great insight. We spent time with a number of PGM experts, and some of these, to your question, was very much around adding technical advisors. We've got who we believe are the best people who understand PGM ore bodies globally, who can provide us insight into how to grow, how to understand, how to model our ore bodies, to challenge our thinking around size of our PGM grains, how to best extract it from a mining aspect, and what we need to consider from a value driver practically as well. So all in all, a great, a great trip in a country which is absolutely challenged by infrastructure, power interruptions. They have huge intelligence, they've got huge resilience, but it is a challenging country to operate in today, and will continue to be in the near future. So the world is, really heightened our eyes. The world is really does need new PGM sources as soon as possible to support the growth in, a hydrogen economy.
Thanks, Sam. Might also be worth touching on the fact that the other major supplier of PGMs, of course, is Russia.
Yep.
And obviously there's some known difficulties with dealing with Russia at the moment.
Yeah, there are, and that's an important one to watch. I mean, Russia also, they're a huge provider of palladium into the market, but they do also provide platinum and rhodium and iridium into the market as well. What we're seeing and hearing from World Platinum Council, who we speak with regularly as one of the industry bodies, as well as some of the global refiners, is they still think a lot of the Russian PGM ounces will make its way into the market, either through China and then in through to the Middle East. But they are starting to see a slowdown in operations where supply of mining goods, services, reagents, pumps, parts are being restricted on the back of some of the geopolitical concerns with their war in the Ukraine.
On the back of that, you touched on rhodium there, and I know you did in your presentation earlier. But one question that's come in is asked around significant rhodium that's been uncovered during exploration. Perhaps you could.
So we've been able to, and we've tested in excess of 290 of our holes for all of the PGM elements, and we've been able to identify rhodium within our PGM reef in the huge majority of our holes, and it looks like it sits consistently on the footwall side of our ore body. So rhodium will be a key economic driver. It'll also be a key PGM product for Parkes Reef as we work forward. We'll continue to test that with future exploration, but we are happy, comfortable, and confident that rhodium is a core part of our PGM ore body.
There's questions come in around the future development potential and how long the market might take to value Podium. I note in the question they've said valued at $5 per ounce. Perhaps you might be able to talk to the cost per ounce there and what you think about timing in terms of the market valuing.
It's a tough one, and every company is different, and shareholders will value us at where they think the value prospect is. I think on one of the graphs we share on the pack, the public data suggests that Australian and Canadian peers, so explorer peers outside of South Africa, have a range from $5 per ounce where we are now, all the way through to $200 per ounce if you're associating Chalice as a PGE peer as well. I think the difference is we think we're undervalued compared to peers, so we would love to see a rewrite on that, on the back of the right people doing the right work with existing mining leases and native title leases. We think we are well placed to be at the forefront of development and into production when comparing peers, and we'd expect, as we start working through those development activities heading towards production, there would be a re-rate along that journey.
And this might be a different way of asking a similar question, but one's come in asking about the recovery factor that you might anticipate from your 6 million ounce resource. And I suppose in light of the recent metallurgical results, that you might be able to point people in the right direction.
It's a good question. It's early as an inferred resource, so we need to do some infill drilling to understand whether we will be able to extract 100% of that 6 million ounces economically, whether it'll be 5 million, 3 million, and this is whether it can be extracted economically from underground, then considering our different processing methods, both from flotation and recovery. So, you know, we've got promising mining recovery numbers, we've got promising processing recovery numbers at very early stage, but our resource and inferred status is too hard to tell how much of that 6 million ounces could and or will be converted to mineable ounces. And in parallel, we also want to significantly grow that 6 million ounces as well.
And a follow-on question from that is asking about the timetable to development and obviously eventually cash flow generation. So look, I know you've got a number of studies underway, so perhaps you could just give a little bit of information regarding upcoming studies and their timelines.
Yeah, it's a good question, and we've seen many juniors, both in the PGM market and outside of it, challenged with a date on when they're producing a defined scoping study or pre-feasibility study. It is absolutely our preference to produce a pre-feasibility level study within the next 12 months is what we'd like to be able to do. All of the work we're doing now from a geology basis, a mining basis and a processing basis will enable us to understand the project economics. The geology stuff will enable us to upgrade our resource confidence or inform how we best upgrade our resource to indicated status, allowing us to release that that pre-feasibility study publicly. So all of the work is heading towards that. So studies within 2024, earlier the better from our perspective, will be important. With strong economics planned or hopeful around the outcomes of that study, we would then look to work towards a bankable feasibility study in the following 12 months, pending funding and pending market support. And then it really is around taking that to the board, shareholders and funding on a pathway to construction and into operation. So let's say 12 months for pre-feasibility study level outcomes. It's at least 12 months for a bankable fees. Historically, Australian projects are in the range of 18 months to 3 years construction. We'd love to be at the lower end, and then it's production after that. So thank you for the question. Lots of hurdles, but a pathway to generating cash flows absolutely front of mind.
So as a follow-up to that, in terms of those timelines, and given the current difficulties that the global market is looking at, what's your confidence level in terms of raising capital from both existing and new shareholders to continue these work streams?
We are confident in what it is. We would love our share price to be at a higher space when we come around to doing our next capital raise. We would love the opportunity to reduce the dilution required to fund these next stages of projects. But we do have very supportive, resilient existing shareholders who see the future of PGMs in Australia and in Podium. So on the back of those, and with support from our broking houses, which we've had strong support from Canaccord's over the previous years, we do have a high level of confidence that we can get the funds to hit those development milestones in 2023.
Going back to the technical side, do you have any idea yet about extra costs that are incurred in order to extract rhodium and iridium alongside platinum palladium?
We don't. Not down to that level. We will expect, well, rhodium and iridium will come out within our ore body from a mining perspective, so we don't expect to see any extra costs from a mining perspective. We don't expect to see any extra costs around recoveries associated with rhodium and iridium when considering flotation process or leach process either. So if there are increased costs or if there is staged processing recoveries, we don't expect that to be a significant CapEx or OpEx input. We truly see those high value precious metals as a real byproduct benefit of our PGM ore body.
Thanks, Sam. We've come to the end of our questions for today, so I'll hand back to the moderator.